story comes out over and over again, and we'll just have to continue just beating the drum, shouting out at the mountaintops, that people understand the truth, and that this is just a convenient narrative that people keep spreading, but it's just not true. It doesn't match up to the actual numbers. When you look at this market share, it doesn't match up to the studies that the Bank of International Settlements and people that are in these financial sectors. They say, look at the size of shadow banking industry, look at the size of mortgages, look at the size of the debt and what's going on with interest rates. When we look at what are the systemic problems or the contagions in the financial sector, we've watched FTX collapse, we've watched Silvergate collapse, we've seen what happens to the world economy when these news stories happen, and it's not even a blip in the grand scheme of things.
Yeah, that's right. And that's the big point, is that the contagion narrative just doesn't have empirical proof behind it. It's probably intuitively makes sense. You $1 billion of market cap just got liquidated. Well, that's going to spill over. But in practice, in actual history, there seems to be very little correlation between a crypto event and what happens in the broader stock market. And actually, most people have seen the opposite, is that what happens in the stock market is what drives, you can kind of see the open on the markets at 9 a.m. And then figure out, okay, well, this is either going to be a green or a red day in the crypto markets, right? Because that often drives what happens in crypto. And so it's this narrative of crypto being a systemic threat to the financial stability. It's kind of like a dog wagging the tail, or the tail wagging the dog kind of thing. I think this is this idea that the small crypto space is creating all these uncertainty and contagion effects. It's a bit like the tail's trying to wag the dog, and that's really not what's going on. And even in the data from the BIS, shows it.
Yeah, the data from the BIS shows it, but also, if we were to really have a chart, which we don't have the graphics for, what you want to be in, come do visual aids, feel free to drop us a line. But the idea is, you can look at a bubble, look at a chart. What is the size of the contagions? What are the risks? The home mortgages, student loans. What are the when the interest rates go up? What's going to happen to this area of the economy? When we look at all of the contagions and the risks that are out there in the financial system, nowhere, the whole crypto market, the whole crypto industry, it's still just a baby. The whole thing could collapse. It wouldn't bring down the financial system. The risks to the financial system have were being created with quantitative easing and other activities. The real risks to the financial system have nothing to do with this new little baby development of this new technology. In fact, if anything, you can see how this new technology would be a great way to kind of transfer and move away from a system that was destined to run off the tracks, and move it to a system that's easier to kind of slow down and contain and control. But if you hear the story that the crypto markets are, because people, even in YouTube, the crypto YouTube side, people love to sensationalize stuff like, oh, Silvergate, oh, FTX collapse, oh, what's this going to do to the crypto market? We even found the crypto market itself barely budges. I mean, it might go down a couple percentage points here and there, but it's not like, oh, the FTX collapsed and then Bitcoin lost 80% of its value overnight. I mean, this idea of volatility is being a little bit oversold, I would say. In fact, that's another thing. People show a chart like this and say, look at how volatile Bitcoin is, and it's volatile as a fast growing new asset in a thin market without a lot of investment in it at the time.
Well, go back to that chart though. Look where that volatility really takes off. It's right around the time when institutional investment and adoption took off.
Oh, that's a good point. So the biggest volatility, and that is true, the most volatility happened at the end of 2017 when they talked about Bitcoin futures and when you first started finding institutional money pour into the crypto ecosystem. So the most volatility has come in post banking and institution ever since they've gotten more and more involved. But you also see the fastest growth be able to take place too. So it's not that it's a necessary growing pain. And people who look at markets and over time, there's a reason why you look at a linear scale and a logarithmic scale and they tell different stories. But this is a linear scale, which tells a little bit of the story. It shows how volatile, fast-growing markets can be. But let's take a look at the same chart and let's look at it in a logarithmic scale. And you see that, sure, things are going up and down over time. This is the same 2015 to today, but they're not really as volatile as they've been. Here was the high at around 60,000, and we've come back down from the previous doublings to 23. But again, it's not nearly as volatile as you would have the news or the sensationalism. Oh, crypto market is too volatile. It's not any more volatile than another asset growing early in its life. People have talked about, look at Amazon in the early tech boom, and it collapsed 70%. Nobody would have called Amazon junk and worthless and a bad product just because it's early retracement from its all-time highs. So
yeah, point.
Is it really that volatile? I mean, compared to maybe something that's been around for a long time, a stock that's in a saturated market, sure. But in the world of finance and in markets, in looking at how much adoption and growth has taken place in the short period of time, is Bitcoin volatile? No, it's actually very healthy. It's actually very healthy in a very normal market. So, so, we hear about the contagion. This is just to continue on that contagion is Bitcoin a risk. And, you look at corporate fraud. This is just one random article, 180 to 360 billion per year. And that was back in 2004. We know that those numbers are 20 years later, highly inflated. Another article, fraud cost the global economy over $5 trillion in the global economy. $5 trillion. Just so you know, that's just in fraud. Okay. Just so you know, to put it in perspective, because it's all about perspective, the whole market cap of cryptocurrency is just over 1 trillion. The whole crypto market cap is just, and the truth is, the real truth is that it's not this high, okay? Everyone in blockchain and crypto knows that this is an automatic computer calculation of all the listed cryptocurrencies in the market cap. You can create an ERC20 token, throw a quick exchange on there, and there's a lot of pump and dump fake projects out there that the value of their market cap isn't real. It's not, you could trace back that the 6 million or 10 million that's listed is not actually something that you'll go out there and exchange for and has real value. Hope you enjoyed that clip. Don't forget to hit the like button, subscription, notification bell if you want to get the latest drops. Of course, all of this is educational, entertainment information to help you in your journey, learning more about blockchain and how to participate. None of this is financial advice, investment advice. However, if you'd like to learn more about blockchain and crypto, we've got plenty of videos and playlists as well that walk you through DeFi tutorials, how to get involved. And if you'd like some more one-on-one help, check out our website, wisebeyondbitcoin.com. We've got plenty of free resources for you to scroll through and check out in your journey, your blockchain crypto journey. Of course, you can also drop us a line. Let us know what you'd like to learn about. Time is money. Knowledge is power. benefit from our experience. Let us know what you'd like to learn more about. We'd be happy to help you. Until the next time, have a beautiful day. Namaste, y'all.